All right. Hello, everybody. This is Brandon Griffin, aka the Realty Resource, and we are joined again by Mike Stone, good friend of mine, partner, and trusted lender. And I love the background, Mike.
Oh yeah, thank you. My wife painted that.
Oh, really?
Yeah.
Oh, wow. That's awesome. All right. I'm going to go ahead and throw Mike's info up on the screen right now. Again, he's someone that I've worked with for a very long time. And if you want to get in contact with him to ask any further questions, I'll also put his info in the description today. But today, we are going to talk a little bit about refinances. And before we jump into that, too, do you want to do a little intro for those that don't know you?
Sure. Yeah, I'm
Awesome.
Mike Stone. I'm a licensed loan officer with Megastar Financial. Basically, that's the fancy term for residential mortgage advisor. Been in the business about 8 years, and yeah, just really love helping clients and being educational, making sure they're fully aware of their options, whether it is on a purchase or on a refinance, and just arming them with the right information to make good, solid decisions.
Awesome. Thanks, man. How's refi activity right now?
It's good. Yeah, it's been very heavy. There's a lot of opportunity there for people. I mean, rates last year was a really good year for interest rates in terms of them coming down from the year before in 2018. But due to COVID, they've continued to get to all-time lows. And I'd say, like as of today, I was just talking to a client. I'd say we're right back where we were the end of February, early March, with hitting kind of the very lowest point with the interest rates we're seeing.
Awesome. Hey, before we jump into some of the questions that we've got lined up, just to kind of help people understand a little bit more about refinances, you just mentioned something that I think is a good trigger. I'd love it if you just elaborate really quickly on what the lowest interest rates might be. I think some people are kind of thinking that they might go even lower, or they're hearing that the government is giving away free money, that the Fed is at zero. Maybe
Mm-hmm.
they're even hearing about negative interest rates. Can you just elaborate on that quickly?
Yeah, I think you're absolutely right. A lot of people think that maybe like with the Fed lowering their interest rate to zero, that might also translate one for one to mortgages, and unfortunately it doesn't. We really track what's going on in the bond market and specifically mortgage-backed securities. So historic lows on a 30-year have been right around 3%, give or take a little bit. That's kind of what we're seeing here these days, three and an eighth, somewhere in that ballpark rate for the par rate. Um, and yeah, and then they can go for any other terms, like a 15-year might be in the mid twos. Like sometimes we'll see the spread there between a 30 and a 15-year, about a 0.5%. The spread's not quite as much here today.
Okay.
And recently with coronavirus, like maybe an eighth of a percent or a quarter percent there. So I don't know that the 15-year has quite hit its lowest points that we've seen. Like last time was in 2012. Um, but yeah, certainly for the 30-year.
Okay, awesome. I think one good way to kind of think of it is that the lending industry is still a for-profit industry, right? So it doesn't really matter what rate they're borrowing at, right? There's still going to be some sort of profit margin there, and it's not going to be one for one. Like, love you, and I know you're a very generous person, but you got to put food on the table, right?
Yeah.
So I think a good takeaway from that little tangent, but related, is that it's probably a good time to start really considering and maybe even locking in. If it's a good rate like it is right now, I mean, lock it. Don't wait for the absolute basement bottom, because we're real close.
Yeah, and it can change on a whim,
Absolutely.
And to your point, the rates get set. I mean, any kind of rate of return, whether it is an interest rate, whether it's a stock and the expected rate of return there, it's all based on expected risk as well.
Hmm.
And while traditionally mortgages have been fairly low risk investments for people that you and I can buy into in these pools of mortgage-backed securities, there is still risk there. People can lose jobs. We're seeing that right now. They can default on the loan, and then the investment doesn't perform, and you don't get that rate of return. So, yeah, well, the Fed has lowered their rate to zero. That's the risk-free rate. There is risk in our world. So,
Yeah, absolutely. All right. Well, let's start with this question. So, how would you know if a refinance is right for you as a homeowner?
yeah, I think there's a couple benefits of refinancing. Like you can lower the rate. You can just reduce your monthly payment, lower the rate. That is probably the most common reason that people do refinance. But some other ideas of why people might refinance might be getting out of an adjustable rate mortgage and into a fixed rate mortgage, or if you can take some cash out of your equity that you've built for either renovations on the loan and financing, or renovations on the home and financing those, or consolidating debt. If you want to consolidate student loans, if you want to consolidate credit card debt, that can always be a good reason to look into, basically getting high interest debt down to low interest debt on a mortgage.
Okay. So it sounds like there are definitely some options. I think sometimes people just think about a refinance only if they have like a really high rate. You know what I mean? Or they want to shorten the term of their mortgage. But I think some folks don't really consider the utility of a refinance as a tool to help out when, they're pinching pennies. Like right now, a lot of people are. So there's a lot of equity, tied up in here in Colorado. There's a ton of equity in most of the homes, right? It's a beautiful thing, and luckily that's a cushion, but it's a cushion that you can't really, a financial cushion you can't use without a tool like a refinance.
Yeah.
Can you speak a little bit to, cash outs? I know that a lot of folks, if they're following the news or if this has been on the top of their mind, they might be hearing things about cash out refis and home equity lines of credit. And then they might also have subsequently heard recently that those are going away.
They haven't gone away. They're just, there have been some announcements from the agencies that has caused lenders to basically rethink how to assess that risk in this time of forbearances and in this time of potential default. And a cash out refinance, from a lender's perspective, we're looking at risk layering.
Mm-hmm.
So you kind of think of the baseline least risky loan is going to be someone who's got high credit, good stable salary job. They've got a lot of equity, or they're putting a lot of money down. And then as that tweaks, whether it is on the loan type of going to cash out, that can be a risk layer that's added.
Mm-hmm.
As that loan to value, or the equity that they have remaining after that loan is less, that's a risk layer. And so on and so forth. So it's not that they have gone away. The big announcement was that Fannie Mae is not going to, if someone closes on a cash out refinance and then immediately goes into forbearance, Fannie Mae is not going to buy that loan. And that just poses a lot of potential risk for mortgage companies that now they have a mortgage sitting on their books that they were planning on, basically selling to Fannie Mae. And that just eats into operating income and the balance sheet. So it's not a good thing. But yeah, and actually from the home equity line of credit standpoint, those rates do usually track more with the Fed. So when the Fed does lower their rate, those home equity line of credit rates go down with it.
Okay.
That's not to say they are at zero. Once again, those are banks, they're for profit. So some of them we are seeing, though, offer really, really low rates to the tune of 3%. And then just talking with a partner the other day, like they're running that right now, but they're like, okay, come June, we're probably going to need to raise our floor in what we're charging there for a rate. So, and not every, home equity line of credit providers do this more than a normal bank would, is that they can manage their balance sheet more so than, if they are taking depository assets and turn around and lending those, that's how they're managing their balance sheet. And so they can kind of turn the faucet on and off, so to speak, where, okay, we're going to run a promotion, run a really low interest rate in the range of 3 to 4% to leverage, maximize what we have in deposits and the rate of return there, but it only goes for a certain time until the balance sheet is the way they want it. And then they turn the faucet off and go back to offering the higher rate. So usually, like, we do see rates in the 4s, even 5% sometimes for home equity line of credits. And then you just have to can be a little bit harder to time and find those ones that are providing the really good deals at a given time.
Yeah, and I think you brought up a really good point too. Right now, we'll close this conversation off, this live at lunch, with a conversation about how to shop. And I just think it used to kind of be that a lot of the lenders had access to the same products, the same rates, and it was a fairly even playing field before you took into account the human capital, right? I think having a good trusted advisor in a lifelong relationship is worth a lot of money. And I don't think you should, at that time, I would say don't shop once you found the right person just for a rate, or, but now it's a little bit different with like you said, that's kind of how they're indicating, all right, like we're able to make more loans or we're not. So they're going to charge more or assess more risk or, you know what I mean, raise qualification standards. So it's time to shop. And luckily we've got you here to tell us a little bit more about how to do that.
Yeah.
But before we get there, so I think we covered this question. Anything else you want to hit on how to know? Actually, I think there's one last thing, how to know when a refinance is right for you. Like as a general statement, someone knowing like that rate is lower currently than what they've got, how would they figure out, okay, this actually makes sense from a cost perspective? Because I think people don't necessarily know that there are paid options and non-paid options to refinance your mortgage.
Yeah. I mean, I think it's good to chat with family, see what your goals are for the house. What are your tolerances in terms of like any kind of cost that you might be paying for a refinance? And then, as we'll talk about here in a second, just go and investigate those options and see what you can get out there that might align with your goals for how much longer you'll be in the home and or in the loan. And then if you're just getting good bang for your buck and saving.
Cool. Awesome. Well, that's a good segue into the next question, which is, what's the process like from start to finish in terms of timeline and cost to go ahead and initiate a refinance?
It's pretty quick. Starts with just inquiring about it. You reach out to me. Hey, looking for what's that?
Of course you do. There are no better options.
Yeah. So reaching out, just once again, I think it's good to have some information on hand with what your current mortgage looks like.
Mhm.
And you can just pull your most recent mortgage statement, send that over to me or to your trusted mortgage originator, and also fill them in on those goals.
Mhm.
How long do you plan on being in the home? How long do you, what are your plans? Do you plan on converting it to a rental property? How much do you want to save, or what do you want some cash out? Just kind of having an idea of what that looks like.
Mhm.
And seeing what they're able to work up for you in terms of that analysis. And so that doesn't take a whole lot of time either, maybe a business day or two. And then
Okay.
the way I like to approach things is just over a screen share meeting
Mhm.
where we'll run through analysis, side-by-side comparisons, but also where are interest rates at, what are the closing costs, and making sure that it does align. And then we tweak it from there. If it is, okay, hey, I want to switch how we're structuring the closing costs, or I want to skip a couple of monthly payments, like that's, we kind of just start out at this point and then we tweak it from there until we feel like we're on the same page or we've really tailored the loan that maximizes the opportunity.
Gotcha. Okay. And you actually did record one of these screen shares where you're basically going through and analyzing the options because there are a lot of options. I think that's one of the difficulties is that there's so much that I think some folks don't even know, and they don't know because they've never been through the process. So getting started is obviously the best first step, and then having a good trusted loan originator like yourself to guide you through every other option that you might have and how that would affect you, I think is a good way to go. What I will do is, are you okay with me making available this example?
Sure. Yeah, you can make that available. We can do a screen share right now and I can kind of run through, kind of what I did there when I recorded it, whatever you think works best.
Cool. Well, because we have this right now, I'll see if I can download it and attach it to this when we this is live right now. If you got questions, we can answer them, but it will be forever in the interwebs. And I'll make sure there's a link in the description to see a little bit of an example to go through it. I want to be respectful of your time too. I know you got a lot of refi business and stuff to do, as well as
Never
purchase.
too busy, Brandon. Never
I
too
know.
busy.
It's a
Yeah.
great answer, by the way. What about timeline? A total timeline to complete something like this. What are we looking at right now?
Yeah, from the day that you hit the go button and lock in your interest rate, so to speak,
Mhm.
I'd say we're projecting anywhere from 45 to 60 days.
Okay.
Now, and what we're telling people is that, hey, it is kind of a gold rush, right? Like
Yeah.
as some articles and news outlets have put it, this is potentially a once in a lifetime opportunity for people to get the lowest interest rates on their home financing. So there are a lot of inquiries there. My team and I have positioned our way, and like that's one of the nice things, not to toot our own horn, but about working with a really operationally strong local lender,
Hmm.
is we've prepared for this. And so while we are setting proper expectations of potentially 45 to, at the long end, 60 days,
Hmm.
if documents come in quicker from our clients and they're super motivated to get it done, if we need an appraisal, or sometimes we don't need an appraisal, and that's one less step to have to worry about, or one outside party that we don't have to wait on,
Hmm.
we've been able to close these within 30 days potentially too. So, but yeah, I think it's good to prepare mentally just for a month and a half or about 2 months.
Yep. And I think it's key too that your timeline is determined a lot by you.
Mhm.
We're in the middle of this transaction. I think you've requested documents a few times. I think I'm supposed to get to that, but then I wound up doing some sort of video thing.
Yep.
I don't
A
know.
lot of shiny objects these days, a lot of
Oh man,
distractions.
so much.
People are still
Uh,
busy, and yeah.
yeah, but it's totally worth it. I really do think that the reason I wanted, you and I have been talking about this for quite a long time, and I think it's a very pertinent conversation to have because it does open up a lot of options for folks. It is an opportunity that might not be around for very long. So, kind of covering this basic information for folks and answering questions right now, I think is a really, really good thing to do. So, thank you again for being a part of this and taking your time.
You're welcome. Thanks for having me.
What about costs? What are some general costs that people could expect a refinance to cost them?
Yeah. I know our costs, and these are the closing costs. This includes not only our fees for processing and underwriting, but also those third-party fees like appraisal,
Mhm.
credit, title company, government. Plenty of hands still in the honey jar, so to speak. But it's our cost. If you need an appraisal, $2,648. If you don't need an appraisal, it saves you $500, $2,148. Whether or not we need an appraisal is not for necessarily me to decide. Essentially, run the loan through Fannie Mae's or Freddie Mac's underwriting engine,
Mhm.
and it will tell us based on the analysis and the risk layering of the application as a whole, is an appraisal required.
Okay.
But and then on those costs, though, that doesn't necessarily mean you have to pay them out of your pocket.
Mhm.
That's one of the flexible things you can do with the refinance, is those can be rolled into the loan.
Okay.
Those can also be covered through a premium interest rate. So if the rate today is 3%, 3.125 or 3.25 might be paying you for all of those closing costs essentially. And that's what we would call a no cost refinance. Whereas there could be, and as I mentioned in that video, there's a difference between a no cost refinance and a no cash to close refinance. And that's where everything's been rolled in and you essentially are kicking the can down the road. You'll pay those closing costs at the time that you sell the property, and you pay them over time as the loan gets amortized.
Okay. So I know there's a lot of analysis again because I think this is about a 15-minute screen share if anyone wants to take a look at it.
Mm-hmm.
So again, I want to kind of make sure that people are getting the global information here. So we can definitely check that out. But what you just mentioned in terms of a no cost and no cash to close, I
Mm-hmm.
think that is a good segue into my next question for you, which is, how do you shop for the best deal for this refinance? And what are some red flags? Specifically, maybe I'm leading the witness here, but how would you know if you're actually truly comparing apples to apples? Because some people might be offering the no cost and some might be offering the no cash to close, right?
Yeah, I mean, I think that's probably the hardest part of this whole process.
Mhm.
And I got to say, the industry of mortgages and banking is really good about not necessarily manipulating the numbers, but presenting them in a way
Mhm.
that might look good to the client and might be beneficial to the client,
Mhm.
but also looks good and might help them make the decision that the bank wants them to make, if that makes
Mhm.
sense.
It does.
um, so that's where it becomes tough. I mean, I think first and foremost, if you had a great experience with your loan originator, that's always the first place to turn. But
Yeah.
talk to your realtor as well, see who they are recommending. Maybe at least to just get one other opinion
Yeah.
and try to compare as much of an apples to apples breakdown. And I'm saying, like, so many people will just in the industry will just kind of mail it in, and they might send you a quick email that says, hey, your monthly savings would be this. They don't
Yeah.
necessarily quote you an interest rate. They say, hey, there's not going to be any money due at closing.
Mhm.
So you're assuming that they're rolling in all of the fees,
Mhm.
which all sounds really, really good in a couple sentences of an email paragraph. But then when you see the actual paperwork, you realize that there are these closing costs. You realize your loan balance is going up from
Mhm.
400 to 405, and that's where it just starts to get a little bit uneasy.
Yeah.
So
Absolutely.
I think trying to get those true fee breakdowns up front,
Mhm.
which some lenders, I will say, just in my experience in watching the industry, they feel like they're kind of giving away the playbook, so to
Hmm.
speak,
Okay.
and that they are, and then they feel like that client or potential client is going to use it to pit them against someone else in the industry.
I think anyone that's afraid of that, that's the red flag.
Yeah, totally. So I think if it's something that you continue to ask for and you don't get, there's a big red flag there.
Okay. Yeah.
And so as you'll see in my video, there's basically 3 attachments that I go through with clients. One is kind of a summary comparison, but then it all matches and jives the other 2 attachments, which is just a clear grid and table of what interest rates are available today, as well as the breakdown of the closing costs. And I like to start with just the most unassuming scenario, and that is the apples to apples. You get your same loan amount.
Mhm.
Like where's your loan balance at on your current mortgage? What does that same loan balance look like in starting a new mortgage
Mhm.
at these various interest rates? And yes, when we do that same loan amount, there is usually cash to close,
Mhm.
as opposed to rolling it in. But I like to start there because I think it does make the true cost of the loan very readily apparent and really helps people make the most educated decision. So, and once again, from there, I'll explain like, hey, you can roll these in if you want to. If that's $1,000 you don't want to have to bring to closing, all
Yeah.
right, we're just going to increase your loan balance by $1,000. But they at least know that that is happening.
Yeah.
Um, and so get the couple quotes, ask one of them potentially to compare them side by side and walk you through them. And
Mhm.
I've loved the screen share technology, so that's how I do that. And but otherwise, yeah, I mean, it can still be, as you can attest, Brandon, it can still be pretty tough. Like it does take a little bit of legwork. You got to sit down. You got to kind of be patient with it to
Yeah.
see, like, just even looking at it, and someone who's been in the industry and an expert, it's
Yeah.
not always readily apparent.
Absolutely. And that's the thing too. I know that within the realm of just a regular purchase mortgage application, the Consumer Protection Finance Board, the CFPB, had to essentially kind of step in and say, hey, man, it's really difficult for our consumers to be able to make these comparisons because of the different ways that the different lenders are presenting all the numbers, right?
Mm-hmm.
And so they did standardize a form that literally put every number in the same place so that when they're held side by side, you can see, you know what I mean? Exactly, like, oh, this might have a lower payment, but it's because you're actually borrowing more money over time. It'll take you longer to pay it off, or you'll pay more interest on it, and you get to see everything.
Yep.
So would that be something you would suggest? I mean, that form specifically that I'm thinking of is an LE, or a loan estimate. Is that the best form to ask for, or what would be the best way to get that apples to apples comparison?
Yeah, that is, but it also requires that the lender takes a full application.
Okay.
And I think with shopping around and even does it make sense for us to refinance or not?
Yeah.
We're doing a lot of analysis before we even run someone's credit report.
Okay.
And with that, there are some assumptions. Like we're looking to our potential client to say, hey, here's what our credit score was the last time, or we track it regularly, and here's where it's at. But until the lender has, all the components they need for a true application, they
Mhm.
aren't required to disclose that loan estimate.
Mhm.
And I would say that's kind of the veil that some of these lenders are hiding behind, is
Mhm.
that they're saying, well, hey, we haven't taken your application yet, so
Yeah.
this is kind of the best estimate we're going to be able to do for you at this time.
Okay.
Red
So
flag.
I think, let's see, if I was, to do it all again, or to be just a consumer and watching this video, I think if you don't know whether or not the whole thing makes sense, I think reaching out to the person you trust the most to kind of give you that answer is probably a good first step. Sorry, my alarm went off. That's my mindfulness timer. Let me just breathe. All right, we're good. But I think it's, figuring it out right off the bat and having that initial conversation is a good way to go. But if the result of that conversation is this is a thing that makes sense, or it's something that you're sure that you want to do, then if you're going to be doing it and that's the case, then you might as well go ahead and do the full application, you know what I mean, with someone. Because the other thing I think people don't understand is after that first credit check, right?
Mm-hmm.
Any subsequent credit check for the next 30 days while you're shopping around is not going to negatively impact your score. And that was, again, a move by the CFPB to protect consumers so that they could have options. Correct me if I'm wrong.
No, I think you're spot on.
Okay.
And yeah, I would say so. I mean, there's a lot of benefit about having that credit report, having the full application. I think it ultimately does save time both for the consumer and for the lender, and not that we're not happy to invest our time to help people walk through that without those items if that's most comfortable for them.
Yeah.
I just think, with assumptions that can lead to changes, right? You
Absolutely.
assume your credit score is 740 and it comes in at 720. It doesn't seem like much, but that can change the interest rate or mortgage insurance or whatever the component
And
is.
it's a different credit score. Not many people know that. It's a different credit score. It's not what you see on your credit card statements.
Yeah. So it is, I think it's worthwhile, but once again, I mean, I think we're all about, adding value and really showing, kind of serving before we sell, so to speak, and not that we're salesy or anything like that. But, I think there's ways for everyone to get the right information, and it just can sometimes take a few more iterations depending on which track we go down.
Absolutely. And the documents that you're going to collect, to actually proceed are going to be the same ones that every lender needs to look at through that process of shopping. So, luckily, like I said, even though the permutations and the way that they show the numbers are different, I think you said it well when you said the person that you trust or that you maybe start with would be a good person to bring the other person's form to, whatever, their projection is or whatever format it takes. And then see if that person would be willing to take the time to help you understand where the numbers sit or what's going on. Because again, that's the thing that can be a little bit hard to see is like, it looks like the payment's better and it looks like the rate's better. Like, what's going on here? Like, it seems like this person is offering me a better deal. Because truly, if it's someone that you trust, they're going to answer your question. And if it is a better deal, I know for a fact, if I asked you, someone else had a better deal, you'd say, hey, that's a better deal.
Yeah.
So, and you've done that. So I do appreciate that for many of the clients that we've worked with together. Mm-hmm. It doesn't happen that often, though. Let's throw that. Cool. Well, anything else do you want to add to this? We don't have anyone live right now, or no questions at least. So anything else you want to add to the conversation about refi specifically that I might have missed?
Not that I can think of. I think we did a good job covering it. It is, that 15-minute video kind of goes through my process. So
yeah, absolutely.
A little bit of time to invest, but if you've got a loan in the 400s at 4.25%, that will be very applicable to you.
Okay.
So yeah, check that out. But I think we covered anything else, and you can always follow up with other questions.
Absolutely. So I'll have Mike's info. I'm going to put it back on the screen right now, but I will put it in the description below, as well as a link to the video that he's provided us. Again, that's a very in-depth look at specifically how to really tell if a refinance makes sense and how to really shop. Because again, the number crunching can get very detailed. Hopefully the stuff that we covered today was high level enough for you to be able to make some decisions, make some phone calls, and that, I guess, is the very next step.
Yeah.
Sweet, man. Well, hey, we always appreciate you tuning in and joining us and providing your knowledge. And thank you to everyone who shows up to these or watches them later. We are always available to take your calls and your questions. We're never too busy for your business, even though we're doing a bunch of refis and a bunch of purchases. Things are bouncing back, man. It's crazy out there.
Sure is. So, well, yeah, thanks for having me, Brandon.
Hey, you're very welcome, and we will see you again.
All right. See you soon.
See you, Mike.